Anthony, if I start with you, what's the kind of moving figure here on how big a cut needs to be in order to see oil prices rally tomorrow?
Well, traders on the floor are looking for anything between 1.2 and 1.5 million cut. And that would be OPEC and non-OPEC members. If OPEC comes in and says, we're going to cut 800,000 barrels and the non-OPEC will cut another, say, 300, it's not going to be enough. You need 1 million from OPEC, and you need it right away. No delay in the market whatsoever. I guess the Russians are wavering right now on a production cut. But I'm looking at 1.5 million, a solid cut, or else we're going to see a 40 handle for crude oil.
Atif, to what extent is OPEC much weaker than it once was? Clearly lots of headlines about Qatar, but then the fact that Russia works with OPEC these days, something that you would not have expected years ago.
No, you wouldn't have expected this, but since 2016, the Russians have joined OPEC. They both have interest in shoring up the price. The Russians would like to see a price around $80 because this is the price where they can balance their budget. The U.S. would like a price that would be, a little bit above 60 to cover the marginal cost of lifting a shale oil price. It seems there is a general consensus here among all the producers that they have to work together, as in the past, to cut production, especially now. The expectation is that the world demand for oil is going to wane down, and there will be more excess supply than what is today. 1.5 million may not be enough.
Atif, Russia may be working more with OPEC, but now you've got Qatar exiting in 2019. Is the cartel at risk of more members leaving and sort of losing its dominance within the oil market?
Well, I mean, the member that is leaving now is Qatar. Produces less than 700,000 barrels a day. Qatar is a major natural gas power, but not very important in the oil market. The fear is that maybe others might leave, and some have already threatened. But this could be possibly part of the gaming, bargaining. Life among the OPEC members has always been fractious. There are those who have large reserves and can wait, and those who really want the immediate money. The story has always been that OPEC, no matter what, despite all the difficulties and conflicts, have always put politics and other issues that are divisive on the back burner, and have always allowed their common interests in higher oil prices to prevail.
Anthony, just quickly, is there a demand part of this equation as well? Is there weak demand for oil, or is it just supply?
No, it certainly is, Wilfred. This is the time of the year where demand starts to fall off. You're going to see it start to increase after the first of the year. But when you look at the economies of Europe and China, they're definitely in a slowdown right now, and demand from both of those places are less. And let's not forget that all this started when we thought Iranians were going to have a lot of sanctions on their oil and they weren't going to be able to sell anything. So OPEC and the Russians actually ramped up production by about 1 million barrels a day. Now, they've been floating the idea of cutting it back to 2016 levels, which is about 1.2 million that we'd need off the market. And I think that that's probably a pretty smart idea, because let's not forget, in the first quarter of 2019, the bottleneck that was happening in the Permian Basin will be relieved a little bit. There are 3 pipelines that'll be done at that point that could bring potentially 1 million barrels of oil to the Gulf. So that'll add to the supply situation. So you've got a pretty big problem here if OPEC doesn't cut significantly.